Hello and welcome to Weekend Investing Daily Bytes. We're shooting episode 209. Today is Tuesday, 12th of April. Markets opened with a gap down and stayed soft for most part of the day. Bank Nifty and banking stocks recovered during the day and were more robust. Uh, Cues from overseas were soft. Oil has started to go up again. Uh, Inflation figures in Europe have rocketed, and we are awaiting the US figures later in the day today, and that will determine tomorrow's price action. So today's price action was rather harsh on some of the sectors. Some of the sectors which had been performing very well in the very recent past, like energy stocks, commodity stocks, real estate stocks, and metal stocks. So basically, some profit taking has happened, especially in the mid and small caps. Also, is somewhat in large caps as well, but more so in mid caps. And uh, particularly hard hit were metals, real estate, commodities, infra, IT, public sector enterprise, and all these sectors, if you recall, were doing very well so far. So it's a short term blip. Private banks and Bank Nifty, of course, were doing reasonably well, ended in green. Nifty ended up 0.82%. So it is some sort of churn that is happening back towards lower sort of risk off sort of a situation where uh, this higher inflation that we are seeing globally, and of course the US 10-year yield is also rising, India 10-year yield is also rising. This is giving some headwinds to the equity markets, and money will rotate into more defensives, more lesser risk avenues, and going into hedges as well. So we are seeing gold, for instance, being robust now, and money coming out of bonds globally. As I said, mid and small cap index down 1.6%, small cap index down 1.4%, Nifty next 50 minus 1.13%. So Adani stocks were, some of them were thrashed today after a humongous run in the last few weeks. CNX 500 broad index and CNX 200 were also down 1% each. In line with the indices, the weekend investing strategies also were thrashed between 0.5% and 2%, more or less all across the board. In terms of performance, there were some handful of real big gainers, but those were very stock specific price action. Garden Reach, Just Dial up 10 and 15%, PCBL up 10%, Mazagaon Dock up 9%, and Cochin Shipyard up 6%. And big losers, Sanofi India, Birla Soft, this was thrashed hard. Bajaj Holdings all down 7%. Adani, as I said, some of the stocks were thrashed minus 6%, and Hindalco and Vedanta were also down about 5 to 6%. So we created this sector ranking matrix just to give you an idea where the sectors are. And this, of course, today's price action is not included. This is dated 8th of April, so up till last week. So what you can see, and this has a lot of insights actually. So what you can see is that this is a ranking of 1 to 18 over these 18 sectors or indices, etc. And we ranked it according to the rate of change over 1 month, 3 months, 6 months, 9 months, and 12 months. So you can actually see that over 12 months, media has been the best performing sector, energy the next, metals, real estate, public sector enterprise, and similarly autos, FMCG, and pharma have been the worst. Over 9 months also similar. So you can see that there were some sectors that have always remained green, and that too in the top 2 or 3 ranks. So energy, metals up till about 3 months ago, and this last month it has dropped a bit. Real estate has come back after being the weakest over 6 months. And then there are sectors which have remained sort of red, FMCG, auto, pharma. FMCG is sort of recovering out of the red. Again, IT remaining very weak over the last month and last 3 months, whereas in the 6 to 9 month, 12-month period, it was still not doing so bad. It was in the middle of the pack. So this gives you indication of which sectors probably are getting oversold. So IT is one of the most oversold sectors here. Pharma is another one. So you can say oversold or the least performing sectors over a month or over 3 months. And then the best performing over a month have been energy, media, real estate, commodities, so on and so forth. So this is giving you some flavor of which sectors have led the rally in the very recent and medium term range and even a longer time frame, and which ones have not. So if you want to take a contrarian bet, you should look at IT, you should look at pharma, you should look at maybe within consumption stocks. And then if you're looking at continued momentum in the ones which are already running fast, you should again look at buy on dips in energy, real estate, media and commodities. So this is what this sectoral ranking can give you some, not exact, but some sort of a handle on the on where things are relative to each other. Another insight today was on various indices from Europe. So as you can see, last 10 years, and we plotted this against gold in the respective currency, so that you can see the impact of gold as a hedge in those markets also. So I've shown you recently impact of gold as a hedge in Turkey or in Russia, Pakistan. So wherever the you've seen weaker currencies, there of course the hedge has been fantastic. But even places where the equity markets have not done so well, there also the hedges have done really well, and a combination or a allocation to non-equity or hedges like gold really did well. So this is UK, this is the FTSE index, and you can see that over a 10-year period, FTSE index has given you about 33% return, or over a 11-year period, and in pounds, gold has given you a 77% hedge on that. This is the Italian index, virtually gone nowhere, plus 11% over the last decade. Again, in euro terms, plus 84% on the hedge. This is the French index, virtually nowhere here, and this is 20-year period from 2002. So again, to over 20 years, the equity index is up 24%. Gold as a hedge has gone up 463% in euro terms. And the last one is Germany. So over last 20 years, 139% on the equity, 489% on gold. So point being that even if you are sitting in a developed market outside the US, gold as a hedge still performed very well. In Japan, it has performed very well. In Asia, I've shown you several times how it has done. So there are lessons to be drawn here about how you should allocate your capital to. And this was the US. This was a insight on how the Pakistani rupee has done versus the Indian rupee, and we can see that instability in the country, and which really nobody has control over. Every 5 years there is a potential that there may be some sort of instability in any country which has even a democratic setup. So this is something that is beyond our control, and there is a risk that arises every 5 years in terms of what kind of a government, whether it will be stable, whether it will be a coalition, how long it will last, so on and so forth, which has implications on the currency also. So what we have seen in Pakistan is that the currency has depreciated dramatically since 2018, while compared with the Indian rupee, which has remained reasonably stable, although over a 25-year period we have depreciated by 109% here as well. This is another chart on the Pakistan portfolio. Again, you can see the ETF of Pakistan is down 45% over a period of last 6-7 years, whereas those holding gold in Pakistani rupees have at least maintained their purchasing power. So we need to remain with our focus on the process. I tweeted today about a personal sort of things that I thought were impossible a few years back. When I started this Twitter journey, maybe 2016 odd, I had like 200 or 500 sort of engagements or reach on Twitter. And then I used to think, 10,000 is such a fantastic number to reach, and 50,000 and 100,000 are probably impossible. But, just one day at a time, and the reach has gone from, few hundred to 10,000 to 20,000, 50,000, 100,000, now nearing 200,000. So again, one small step at a time, and you can build whatever you are building. There was a time when, I used to watch CNBC and sort of have a, bucket list that one day maybe I will get invited here. And that has happened over the period. And fortunately now, media houses and publications would want my, inputs on certain topics. So extremely gratifying from that perspective, that there is recognition of whatever work you are doing. And third was, of course, running a business, offering services to tens of thousands of people. Could not have dreamt of this 4-5 years back, was not even an aim in the mind, but it has happened. So it is a motivational tweet for others who may be struggling, that if you keep doing your whatever you may be doing in the right way and not get bogged down, just keep doing your small steps every day, and I'm sure you will also reach your desired outcomes. So this is all I had for today's Weekend Investing Byte. Please keep watching, please keep sharing. I am enjoying doing this. I hope you're enjoying watching it. So let's keep doing this for some more time. Thanks so much, and I'll see you in another video. Bye.